talk a little bit of chip trading, semiconductors, Qualcomm. Alan Nuckman is the Chief Market Strategist at Agora Financial. But Alan, before we get to your trade, I know you got a comment on the market, buddy, right? Because we've got stocks rallying, we've got Beyond Meat up 33%, and I don't know what that's got to do with the Mexico deal, but whatever. Hey, this is the market.
The markets are on the move. This is the latest edition of It's Not Over. So let's look at the S&P. The S&P is 2 percentage points off its all-time forever high after all we've been through and, all the potential volatility that could be ahead with, Mr. Trump's comments at any time. But you can see that this is a self-created problem and it was a self-medicated problem. And look, he claimed victory and markets are up and away and we're stable once again.
Yeah. All right. So S&P's now continuing to zoom upwards. We're right near the highs. You're looking at Qualcomm. Tell me why amid all this, Alan, you're looking at a chip maker.
Well, the tech takeoff. We had the tech unwind here. Now, we've seen it 5 times in the last couple of years where we've seen the NDX, the tech top 100, sell off more than 10%. And what's happened each and every time? It's rallied back and made new all-time highs. So let's see if that can happen one more time. We're still up nearly 30% off the lows in December and almost 20% so far in 2019 when you look at that group. For Qualcomm, it's really a technical trade. If you look at your charts, I know you're a chart lover, look at those charts. You can see some gaps up above. And this breakout of the range, we've been trading between 65 and 70 now for more than 2 weeks. Breakout of the range target 75. So that modest move with the right option strategy can give us a big payoff.
Yeah. All right. So what are you doing with this now? Give me the structure of how you're trading it, Alan.
July in the money call. July 65 call. July 65 call is going for about 6 right now. It's $5 in the money, so it's going to act much like the stock. Now, if it gets to that 75 level, this option will nearly double in value. A good example, we talked last week. We talked Target. Target had a modest move and a nice little breakout here, a little rally, and that option gained more than 50%. So it's about these small moves in the underlying stock and a big payoff using the right option. Now, we're not using June options. We're using July, so we've got an additional couple weeks of time for this market to follow through and push the upside. Those gaps in the charts, if you show the chart there, those gaps in the chart often act like a magnet, and markets will go back and fill in those gaps, and that's what we're looking for, the larger overall macro market momentum to carry this stock that had an unwind after a big rally. It's 20% off the highs. It's also 20% off its lows.
Yeah. All right. Qualcomm now, as you point out, given the big Apple move, it's like from the chart perspective, technical analysis, Alan, when you have a massive gap on like a single item, news item?
Well, but that is true. Now we have to wait for the next piece of news. What is going to be the next resolution? We have the big rally, we had the comeback down. So markets often come back to the breakout point. So from a trader standpoint, you want to lean on these kind of levels. You want to lean on these support levels, these breakout points. And I think this is a good entry point for a second and make another move to the upside and ride the macro market wave as you see tech make a comeback.
Yeah. All right. There you go. Tech leading today. We got a nice move in the NASDAQ. Alan, what a session. Have fun down there at the Seabowl. We'll catch up with you soon. Mr. Nuckman, Chief Market Strategist at Agora Financial. Bullish on the Qualcomm trade. We'll be right back. We're going to talk about where to go if the markets slow down, how to find liquidity, how to find stocks that may not get rocked.